So what are you making of all these gyrations that we're seeing right now, and a flight into the dollar? Is it warranted?
Yeah, I think what we've seen overnight is very dramatic moves in the currency markets, and they are a culmination of just the sheer amount of bad and negative commentary on the global economic outlook we've had in recent days. Those poor European PMIs, the China PMI, the IMF saying that we're entering a dangerous situation, and the Fed warning of the downside risks. So these have led to your typical run into a safe haven into the dollar. Now, over time, the dollar is probably not the place to be, but in the short term, when you have high levels of market volatility and you get an unwinding of positions, then people are going to demand dollars, and that's what we've seen overnight.
And no clarification yet on the position with Greece and you know, what it does in terms of the longer term here. Does it actually move into an orderly default, or can it stave it off? I mean, that's the question everybody's asking.
Yeah, and that is creating this uncertainty that you're seeing in markets and the volatility. Over time, we perhaps will see that situation in Greece, and as long as it is controlled, and we're looking for guidance from the Europeans through this IMF World Bank meeting and G20 meeting this weekend to suggest that they are putting the backstops in place to ensure that in the eventuality of anything negative happening on Greece, that they are prepared to deal with the financial fallout that you're seeing.
Right. Well, does this mean that you've really ripped up all your currency targets for the year end, or indeed for the end of the quarter?
Look, we are reassessing those numbers given the moves that we've had and the volatility that you are seeing in markets. But for particularly the Australian dollar, you know, we are warning of risks of these periodic sell-offs with the rise in volatility. It's not immune to that. But our base case is not a global recession, which is what's being priced in at these levels. And we do expect some stability to return to markets and the Aussie to move back above parity when things calm down.
Yeah, and what is, I mean, the Aussie dollar pricing in when it comes just to the Australian economy right now? I mean, with some signs of weakening, but really nothing major in terms of, as you say, recession.
That's right, and we do not think that the Australian economy will enter a recession. We have a 1.9% GDP for this year, and indeed above the IMF forecast for next year, so things improving. It all depends on the outlook for China, which we don't expect to enter a recession or even any significant slowdown. That's something the market will watch very, very closely. But as long as it continues on a solid path, then the Australian economy should do well. The market's pricing in for RBA easing right now, which is putting some pressure on the currency. Over time, as I said, if you see volatility reduced, then that should allow the Australian dollar to move back above parity.
Yeah, the other place where people have been keeping their money parked is the Japanese yen. Does that continue? And you know, does it surprise you how strong the yen has been, and could it strengthen even further?
Yeah, the yen has been very interesting right now. In fact, it is strong right across the board against the Asian currencies, which are selling off, and against the euro. Against the dollar, it is at its highs, but it has been remarkably stable in the context of this volatility that we're seeing. And the risk is that it does manage to move lower in dollar yen whilst this volatility continues. And the reason why we're seeing that, it is one of the global safe haven currencies that tends to do well in these periods of volatility. The market is a little bit cautious about any potential intervention there by the Japanese officials, which is keeping it stable against the dollar, but the risk is that dollar yen does move a little bit lower.